Tesla stock is soaring higher yet again today, up about 6% at the time of recording this video. And this is why. First up, this article came out earlier this morning that says Tesla rallies as investors prep for earnings and robotaxi developments. Tesla traded higher on Monday as investors prepare for the electric vehicle maker's Q2 earnings report and wait for word if the August 8th robotaxi event is being postponed. See, we still don't know if it's actually postponed or not. And I think we can all agree, just knowing Elon for a little while now, at least from, an outside perspective, the thing that he would want the most is to still have the robotaxi event on August 8th and screw everyone else that was betting against Tesla. So I think he is trying as hard as possible to still have this event on August 8th. Would it surprise me if it's delayed? No. But it also wouldn't surprise me if Elon comes out any time now and says, yeah, we're still having the event on August 8th, and Tesla stock rips even higher. But Morgan Stanley's Adam Jonas released a new note on just this morning. Morgan Stanley does not think a delay in the robotaxi event would be a negative. Analyst Adam Jonas and his team see scope for the postponed robotaxi day to highlight more of Tesla's embodied AI capabilities beyond app-based autonomous cars. The firm expects Tesla's master plan forward to be underpinned by its commercial ambitions in AI, robotics, and hybrid compute, including distributed thermal and compute in the car. That spans from cloud to edge. Quote, over the next few months to quarters, we expect to see the world of Gen AI, digital AI assistants, colliding with the automotive ecosystem, noted Jonas. And believe it or not, part of this rally today with Tesla's stock, and you're not going to believe this, is the fact that Elon Musk endorsed Donald Trump. It says here, Musk appeared to have reversed his prior position about not donating to either the Republican or Democratic presidential candidates when he reportedly gave a significant amount of money to America's PAC, which is a powerful political action committee established in Austin, Texas. Some analysts think Tesla would benefit in a new Trump administration, even if some government support for electric vehicles is reversed. So the fact that Elon's showing more support to Trump and Trump's odds of winning have just went higher by roughly about 8% following the horrific events over this weekend, it does lead people to be more bullish on Tesla stock. And I think the biggest reason for that, among many others potentially, is just the fact we're going to get more rate cuts under a Trump presidency than basically anyone else, because he's a real estate guy. He understands how hard it is to get financing for anything. The question of, does inflation come back or not? I personally don't think so. That's going to be an open topic of debate for a while. But more rate cuts is seen as a huge positive for Tesla because that will give Tesla the ability to not need to buy down the interest rate as much. Imagine it like this. If rates did go back down to the neutral rate, if you will, let's call it 2.5%, let's say 10-year treasury yields are 3% or so, then Tesla may actually be in a position to raise prices, possibly. That could be very good for margins. At the bare minimum, they wouldn't need to buy down the interest rate as much to spur demand. So it is actually a fundamental positive for Tesla stock. And, the reason Tesla's up now 5.5% at the time of recording this video is not just political in nature. There's actual reasons behind this. We do have this negative note out today from Wells Fargo that just shows you how completely behind the ball Wall Street analysts truly are. Wells Fargo remains bearish on Tesla's stock and sees more than 50% downside risk. Wells Fargo says Tesla stock climbed roughly 40% over the past month, mostly driven by razzle-dazzle headlines, analysts noted, but fundamentals remain weak. Quote, we suspect a largely retail-driven rally has squeezed out shorts and forced long-only rebalancing. However, infatuated investors ignore the warning signs, Wells Fargo's analyst wrote. Despite the positive news, Q2 deliveries were still down 5% year over year, likely bolstered by financing promotions of up to $5,000. Moreover, the anticipated robotaxi reveal has been delayed to October. That's not confirmed. Even more troubling is the $9,000 tariff risk on Model 3s in Europe, Wells Fargo highlighted. Analysts said Tesla's recent rally has been fueled by several positive developments, including beating Q2 delivery estimates, the approval of Elon's $56 billion pay package, FSD testing in China, the deployment of Optimus and robotaxi hype. That said, we suspect technical factors likely exacerbated the move. Short positions were likely covered. Tesla stock appears under-owned by mutual funds, prompting some rebalancing, and retail interest surged to about 48% of the shareholder base, the investment firm highlighted. Against this backdrop, Wells Fargo analysts have raised their Q2 estimate from 41 cents to 50 cents, reflecting leverage on higher deliveries, energy, and storage strength, partially offset by price cuts. Conversely, the full year 2024 EPS has been lowered from $1.75 to $1.60 due to added costs from US and EU tariffs, assuming flat pricing for the remainder of the year. EPS estimates for 2025 through 2028 have also been reduced to account for the increase in EU tariffs. So Wells Fargo is not even considering the fact that rates could fall much more than we expect potentially next year. They say here, quote, "We also see a Trump win as a risk to Tesla, given the risk to the IRA benefits." Again, just how cozy Elon and Trump are these days. I don't think the benefits of the IRA tax credit get rolled back. It's a possibility, but I think that would be more than offset by rates falling more than expected. They also said that this was mostly a retail investor driven rally and a short covering rally, and we just don't see any evidence of that. I've reported the sentiment over on StockTwits basically every single day. Now, this is just one thing to look at. I get it, but it's a really, really good indicator of how retail investors feel about Tesla or about any other stock for that matter. And you have been extremely bearish for many days. Today, in fact, is the first day that you've actually been neutral. So Tesla's score today is neutral at 53. Every other trading day, you have been extremely bearish. Even as Tesla stock has been ripping, a lot of retail were trying to time, what was going to happen with Tesla, if it was going to fall more, and trying to get in, get out, trying to, get the best pricing possible. And I think a lot of retail were caught off sides and were not positioned for this rally. You see a lot of people that are still angry, really. I wouldn't even say bearish necessarily, but just angry that they did not get into their Tesla positions. Perhaps they sold out in the 200s to 180s and did not buy back in under that. And I still think there's a lot of retail investors, judging from this, that are still on the sidelines, that are still waiting for Tesla to come back down a bit before they start to get back in. And in terms of shorts covering, I mean, you've had a little bit of short covering. You've went from 3.84% short interest of free float to 3.79% short interest of free float. You have had in total about 2 million shares that have been covered. Guess how many shares are currently sold short? 105.2 million. So you've had less than 2% of the entire short position actually be covered on. Those are tiny, tiny numbers. And, I don't think from that perspective, you've seen Tesla stock go higher because shorts are covering. Yes, it's helped a little bit, but a lot of it is just retail investors getting reallocated to Tesla now that things look like they could be better than expected. Now, on that note, you currently have $26.11 billion currently in short positions, and you also have so far today, return shares of 2.09 million. That can be covered shares, or that can be shares that hedge funds institutions borrowed but did not yet sell short that they return. So could be some short covering, could be some just shares that are being returned, but that does total 2.09 million. And you do have borrowed shares at 419,000. That means on net, potentially as high as 1.67 million shares are being covered today. And after a 6% rally in Tesla stock, you would think some shorts would start to cover on short positions. After all, short sellers are down another $1.4 billion today at the time of recording this video. That's not a small chunk of change. That is 1,400 millions. That's a lot of money. And a little bit of positive news today. Global Equities Research raised Tesla's price target to $400 from $330. $40 per share. They say it's because accelerating EV demand. You also have a technical analyst, Peter DiCarlo, that says that Tesla could see $400 by the end of 2024. That's what I'm expecting as well. It is also being reported today that Tesla has secured a new $375 million Megapack contract to build a 415 megawatt, 1660 megawatt hour battery in Australia, one of the biggest 4-hour batteries in the world. The battery is expected to commence commercial operations in 2026. So in just the past 2 weeks, Tesla has secured new Megapack contracts worth a combined $800 million, totaling nearly 2.4 gigawatt hours of battery projects, and these are just the ones that we know about. Considering the battery energy generation and storage division of Tesla did very, very well in the last quarter, it looks like that momentum is continuing, and that is currently Tesla's highest margin business. As that segment of Tesla's business continues to grow and grow at a faster pace than the car business, I would expect Wall Street to start paying more attention to this. It is being reported that BMW sold a total of 107,933 BEVs in Q2 2024. That is 17.4% of all vehicles delivered, which were purely electric. Tesla's Europe and Middle East X account says in the Netherlands will match the subsidy of almost 3,000 euros for pre-configured Model Y rear-wheel drive vehicles, but you must place the order between July 9th and August 31st and take delivery before September 30th. And according to Teslarati, US EV adoption is still on pace to reach 50% by 2030. 10-year Treasury yields today are up about 2.5 basis points to 4.21%. And you can see at the time of recording this video, the Russell 2000 is the outperformer today, continuing this streak of outperformance we have seen, up over 2%. The VIX is also up about 3.77% today, which is pretty wild considering the S&P is up almost 1% as well. That means there is a lot more money now going into puts for the S&P than calls today, which I do think is a sign that some people on Wall Street are a little worried about earnings that will be coming out this week, specifically I would imagine around your AI stocks like ASML and TSMC Wednesday and Thursday, not to mention Netflix after hours Thursday as well. Google Trends data does show a continued decline for the Cybertruck, now at 59. You can see the Model Y at 24, the Model 3 at 23, the Model S at 10, and the Model X at 9. And Google Trends data for full self-driving is remaining unchanged today at 16, which is roughly where you were before this free trial started. So I'm starting to think maybe you see another promotional kind of influence to FSD to get more people on FSD, to get more interventions. As Elon Musk has explained many times, the main thing that is stalling further progress on FSD is it's taking so long to get interventions. You need interventions to train the software, and to get more interventions, you need more people driving on the software. Here today, the odds of your first cut coming by July 31st are rising quite a bit to 14.5%. Last Friday, it was only a 6.2% chance. So odds are rising quite a bit that you do see that first cut July 31st, although that's not the base case from Wall Street's perspective. Now, September's odds are actually coming down a lot for your first rate cut September 18th, which doesn't make a whole lot of sense. You went from 90.3% chance last Friday to now only a 14.5% chance today of a cut September 18th. So maybe the data is just wigging out a little bit here. November 7th is when you're pricing in your first Fed rate cut. And by December 18th, you're still pricing in, well, not only 2 cuts now, with 54.1% odds. So it's moving around a lot. And I think that's because of what Powell said today. And likely we have a lot of economic data this week that could influence when that first cut does take place. And Tesla is currently running about 4,000 different ads with Google. Tesla's global inventory numbers are falling for the Model Y to about 4,800, the Model 3 to about 3,700, the Model X to 3,100, and the Model S to about 2,600. On a technical basis, Tesla's stock looks beautiful. You're around 258, 259 right now. You were as high as about 265 earlier in the trading day today. But here, look at the RSI. The RSI was at 87. It needed a bit of a reset. Thursday, when Tesla fell over 8%, gave you that reset. Now you're looking to retake potentially this high that you've seen during this cycle of 271. And the RSI is only at 72. So things look much better for a larger rally from here. Really, no matter what happens in our markets, I still am a little concerned about a potential earnings correction in our markets. And a lot of Wall Street is starting to, become more concerned about this. That's a healthy part of bull markets. Keep in mind, you should see corrections. But nonetheless, the only thing that really matters for Tesla on a technical basis is we stay above that 226 area. If we stay above this trend line, then that's great. That's bullish. That's good, because this is your long-term trend line, and that would support Tesla stock that could continue to go higher. Now, if for whatever reason we break under that, that would be bad news, but even after the last 2 days now, you're getting further from that level, and I don't think you're going to break under that at all, potentially ever. From my expectations, we likely hit new all-time highs by the end of this year. So yes, I still think buying Tesla stock at 260 is still a pretty good price. And I think this 8% reset on Thursday does set us up in a favorable way for Tesla's earnings when we do get new products, right? I'm sure we're going to get the product unveils for the cheaper models. And that's going to be the next big catalyst that drives Tesla stock higher before the robo-taxi event. Tesla's MACD also looks very good at 20.47, signal line at 16.86. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day, and I will see you in the next one.